Before the break, we were talking with Lara Sanley about the sell-off in Intel shares. A company which once dominated the chip landscape has struggled to find its footing. And after big efforts to turn around, the new CEO is giving Wall Street a reality check with a big cost-cutting plan. Matt Bryson helps to cover the technology sector for Wedbush Securities, and he's joining us this morning to talk a little bit more about the takeaways from Intel. Matt, it's great to have you with us. Thanks for your time. What was your reaction to sort of this new game plan laid out by the CEO?
I mean, it's a stark difference from what we had with Pat Gelsinger, right? Pat was unbridled optimism. We're going to spend all the money that we need to, and at the end of the day, we're going to produce the best product out there using the best manufacturing processes in the world. What we got with Bhutan was more, look, we're behind, and what we're going to do is what makes sense. And so if we can't get 14A to work, if we can't sign other customers, and I think part of that is kind of pushing the other large chip designers out there to use them as a foundry who don't have an alternative to TSM. But if we can't compete, then we're not going to invest. And so it's a far more pragmatic approach. I think it's probably the right approach at this point, but you end up with a whole bunch of different assumptions if you're not looking at Intel getting back to the Intel glory days of old.
Yeah, and look, at the end of the day, this happens quite frequently in the business landscape. Giants are surpassed, and expectations have to be reset. We've gone through it here in Canada as well, as you know, sort of re-rating what the business of BlackBerry, had become, et cetera. So how should people think about what Intel will represent as an investment at this point?
Yeah, so from my perspective, it's tough, right? Because if they're just a chip design company, right now they're not doing as good a job as AMD. AMD is taking share in servers, they're taking share in compute, they have an AI strategy. So it's hard to be enamored with Intel from that perspective. At the same time, I kind of look at it bottoming out around tangible book, but that's all based on the assets within the foundry. And so if the foundry, if the fab aren't competitive, then maybe those assets don't have value. And it really still comes back down to, can they get their fab to work? And if they can't get it to work, then can they design a better chip than whoever the competition is, AMD in compute or NVIDIA in AI? And we just don't know. The first look is really going to be Panther Lake. That comes out at the end of the year. But till then, kind of Intel's still just stumbling along. And I don't see there being a whole lot to do.
So I want to put on your strategy hat for a second. I know this sort of falls outside of what you'd be writing about leading into and out of quarterly results, but it really does feel like on Wall Street everybody's trying to sort of now take a fresh look at how Intel fits into the picture. A company with such tremendous roots in Silicon Valley, is there a possibility that this business, what it represents, what it perhaps has behind closed doors, that there might be, an appeal from somebody to sort of step in and look at this business, maybe buy this business, maybe private, operators seeing an opportunity here? Like, do we have to start having that kind of conversation about them at this point?
I think the struggle with anything strategic is that you don't have a natural buyer. So AMD was in a similar situation back in the late 2000s, and they ended up selling their fab business to a Middle Eastern the wealth company. right? You can't see that as an end game for Intel's assets. I don't think the U.S. would allow a foreign entity to come and own the U.S.'s largest fab presence. At the same time, if you look at something strategic, so let's say a Broadcom and a Qualcomm and a TSM line up to buy Intel to rescue the fabs, which I think was rumored 3-4 months ago. The problem there is you probably need buy-in from China, and that becomes a political question. But China's been really reluctant to allow these large deals to happen. Also, you have to get buy-in from Europe. In the TSM's the largest single fab out there, and so if you combine them with the second largest fab, that's not particularly in the best interest of competition. And so I think part of the problem is there's not a natural kind of break